Chand Infralogistics latest earnings are finally out. Stock price declined by 16.9%. So maybe the earnings had something to do with it. So here are the earnings. All of these earnings are in millions of rupees. We are focusing on quarter three fiscal year 2026. These are the latest earnings. So in millions of rupees, first of all, we have revenue from operations at the start increasing by only 7%. Only 7% growth to 68.6 crore rupees or 686 million. So you add a decimal point. However, revenue only grew by 7%, but the earnings before interest, taxes, depreciation, amortization, EBITDA rose by 24% from 20.8 crores to 25.7 crores for fiscal year 2026 quarter 3. Now, if we go back, if you see here, EBITDA margin increased from 32.4% to 37.2%. So EBITDA grew very well. But if you go below, you see profit after tax only grew by minus 0.4%. Profit after tax actually declined despite EBITDA growing by 24%. So what happened? First of all, let's see these. First, we have interest. Interest on loans. They rose from 19 million or 1.9 crores to 3 crores. Okay. But the big thing is depreciation. Depreciation rose from 11.9 crores in quarter 3 fiscal year 2025 to 15.7 crores in quarter 3 fiscal year 2026. Depreciation increasing was the biggest reason why profit after tax declined. And that is why, if you go below, you will see this cash profit after tax. Cash profit after tax is basically profit after tax plus depreciation. This metric is sometimes used by companies to show how much cash money they actually made or cash profit they made because depreciation is a non cash expense. It does not really hit the profit and loss or does not really hit the cash reserves of the company. They don't really have to pay it in actuality. For example, employee expense, like manpower costs, they have to pay. Repair and maintenance, they have to pay. Fuel and costs, they of course have to pay. But depreciation, right now, at the current moment, they're not really paying anything as depreciation. So cash profit after tax rose by 22%, which shows how much depreciation actually rose. But normal profit after tax, the at the end of the eight profit after tax, in decreased by 0.4%. Okay. The good thing is they still have a healthy order book. So they have a healthy order book of 969 million rupees or 96.9 crores. Okay, 96.9 crores. And look at this. It's executable within fiscal year 2026. So within fiscal year 2026, 96 crores worth of orders will be executed. And if you go here, comparing June 2025 and June 2026 order book, there has been a 32% jump in the total order book. Order book means orders from customers. So that's a good thing, more orders. Then, how about this order book? 66% is from equipment hiring and projects, and 34% is for the warehousing and transportation work. And for the growth guidance or the target, the company is still targeting an annual growth rate of 20 25% over the next 3 years while sustaining strong margins. The growth target remains the same, 20 25%. Then, few things here. This is said by, I guess, one of the important managers of the company. Okay, said by management basically. So they saw significant EBITDA margin expansion. And look at this. As of 9 months fiscal year 2026, that is the first 3 quarters, quarter three just ended. So the first 9 months of fiscal year 2026, we have deployed 121.3 crores of capital expenditure, okay, surpassing our original fiscal year 2026 plan of 100 crores. So earlier, they had earlier planned for 100 crores of capital expenditures in fiscal year 2026, but they instead did 121.3 crores of capital expenditures. Okay. And at the very bottom comes this. With a balanced executable order book of 96.9 crores as of January 2026, the company is gearing up for its first ever 100 crore quarter in quarter 4 fiscal year 26. So they're very much expecting that in quarter 4 fiscal year 26, they can have revenues of 100 crores. So you can see what the revenues were. You know what? we should see, okay, 100 crores. Let us go to screener.com. Here we have screener.com. Let us go to quarterly results. Okay, 100 crores. Keep that in mind. We go quarterly results. Remember, all these earned crores. Topmost figure is sales. Sales. So pay attention to March 2025. So March 2025 quarter sales were 81.63 crores. They're getting up for 100 crores. Let's say they achieve it. They achieve 100 crores of revenue. So how much growth is that? That is around, according to my calculator, 22.5% revenue growth. So yeah, let us see how the company does in the future. Strong order book growth, depreciation really ate up all the growth in EBITDA. But still, at least EBITDA grew. At least EBITDA grew.